Hey guys, how's it going? Thrive Venture Investing here today. So I'm back to you today with another video. Today we're going to be talking about Air Canada, their Q3 2022 results. And yes, the revenue's up nearly 200% year over year. Taking a look at the stock, as of recording this today, they're up over 3% closing. It was a pretty solid day, even solider of a quarter if you ask me. So today we're going to be getting into these numbers. I listened to the conference call. We're going to go through the financials on a year-over-year basis and give you my opinion as usual here. I structured this today Q1, Q2, Q3, so you can see 2022 as a year. If you want to see the other years, go to my other videos. You can see how this has progressed, and this has been pretty impressive. Passenger revenue, okay? So this is really the bright spot of the earnings report. This quarter, over $4.8 billion. These numbers are in millions, so 4,818. Quarter before that, 3.4 billion, and before that, 1.9 billion. So we've really seen those passenger revenues just ramp up. Not so much cargo revenue, but there is an explanation for that. So if you keep watching, they explained that in the conference call. Still very solid though, 281 million, 299 Q2, and 398 Q1. Other revenue was 223, 241, 258. So that gave us the total revenue, which is this number that we're looking at on a year-over-year basis of over $5.3 billion versus under $4 billion last quarter, 3.981 billion. I forgot to write that in there. Let's write it in. There it is, $2.5 billion. So we've seen this progress as well. Net income also is a little bit worse than last quarter. We're at over 508 million. It was 386 million, but then we had almost $1 billion loss in Q1. There's some reasons behind that as well that we're going to get into. So if you're curious about that, stick around. EPS was actually slightly better though. A loss of $1.42 versus $1.60 Q2 and versus $2.72 in Q1. Cash positions, this has been very critical. I mean, if you first started watching my videos when this whole pandemic started, this was the concern. This is why they got liquidity. This is why they got to deal with the government. But still, it's remained pretty steady. It's 8.4 billion, so 8 billion, 490 million versus 8.6 billion, so dropped slightly. But of course, it was even less in Q1, so it's pretty much on par. So this really isn't a concern anymore. So this is actually one of the reasons I'm surprised the stock is not up more than it is right now. So what we're going to look at right now is we're going to go take a deep into the financials, and I'm going to explain some of the reasons why we're seeing what we're seeing here. So on this, guys, I'm going to skip over the balance sheet because there's not too much to talk about on here. Of course, we have the cash position. The total current assets are 10 billion, total assets 29.7 billion versus total liabilities of 31 billion. So if you want to take a look at that, look up their financials. But so we're going to start on the statement of operations, otherwise known as the income statement. And again, this is for this quarter, which is Q3 2022 versus Q3 2021. Of course, we saw in 22, we saw these numbers, but now we're looking at them on a year-over-year basis. And this is where we can see that passenger, 4.8 billion versus 1.6 billion a year ago, 281 versus a 366. Now, the reason for that cargo drop, we're going to get a little bit more into that after, but basically they're transitioning back into their passenger a bit more. But I hope, like I said before, that they grow that out in the future. So the total revenues, 5.3 billion versus 2.1 billion a year ago. So very good to see. In terms of operating expenses, aircraft fuel, of course, this shouldn't be too much of a surprise. They don't hedge. 1.6 billion versus 472 million a year ago. Of course, when you're going to be flying more people and you're increasing your capacity, that's going to go up. But we all know what's happened with the price of fuel, consequently what's happened with the price of jet fuel. So that's something that has hurt them and something that's hurt the bottom line, but still, being good results. Wages, salaries, and benefits. Of course, that's going to go up in line at 816 million versus 592 a year ago. So their operating income was actually positive. So this was the first time since the beginning of the pandemic, $644 million positive operating income versus a loss of 364 million a year ago. In terms of non-operating income, this is the one that made a huge difference here. Now, the foreign exchange loss, it was getting close to $1 billion, 951 million versus 136 million a year ago. As you might have expected, one of the main reasons for this is the weakness of the Canadian dollar. But this gets a bit complex. It's likely going to be less when they realize it. This is basically just how they report it. And they also do hedge as well. So I wouldn't take too much into this. I would expect maybe the bottom line to be a little bit better than this, but this is how it's done in accounting. So keep that in mind. Interest expense, again, was huge, 239 versus 197 a year ago. Of course, we've seen interest rates go up, so that's going to harm companies with a lot of debt. So that's increased a bit, and that hurt the bottom line. Total non-operating expense is 1.1 billion versus 350 million a year ago. So you can see, especially how that foreign exchange loss really hurts. So strengthening of the US dollar, if that reverses anytime soon, that's going to help Air Canada's bottom line. So the total net loss for the period was $508 million versus a loss of $640 million a year ago. And then the diluted EPS, negative 142 versus negative 179. Taking a look at the cash flow statement here, not too much interesting. If we look at proceeds from borrowing, we can see they only borrowed 41 million versus 6.7 billion. Of course, we know what was going on there in 2021, right? Also, in terms of investing activities, so the net outflow of cash investing activities was negative 56 million versus 1.4 billion, again, for obvious reasons. So the cash and cash equivalents at the end of the period were 2.6 billion versus 5.3 billion a year ago. So guys, as I mentioned before, this is the first thing they mentioned in the conference call. First time since the beginning of the pandemic, we had positive operating income. So this is just huge in itself, and maybe something might be lost in the financials if you weren't looking for it. But that's huge. Something even bigger than that is they had 96% of Q3 2019 revenue. 96%. So they're, again, basing on 2019, because that was a very strong year before this all started. They had 96%. And of course, 93% of the passenger revenue, and that's the total revenue. I should mention that. It's the total revenue. So 96% of the total Q3 2019 revenue is what they had here in Q3 2022, right? 93% of the passenger revenue is what they had of that same 2019 quarter, but they were only operating at 79% capacity. So that's huge, right? We're going to get a little bit more, a little bit here into the guidance going forward. But that just shows you, I'm kind of like the stock said, $20 a share versus 50. Is it a bit underpriced? Well, that's up to you to decide. But really, we're getting really close here. Cargo revenue was a little bit of a sore spot. And again, I mentioned this before, that this is something that I like to see them build this out, and they are getting new, acquiring new aircraft, stuff like that. This quarter, they've acquired more. They've taken delivery. But the main reason for this drop was lower traffic in the Pacific region. And as you might expect, they're returning some of their fleet to passenger service. So that, of course, reduced that. So that was the main reason that they talked about that happened. In terms of guidance, Q4, so that'd be next quarter, they plan to increase capacity to 85% of Q3, well, that'd be Q4 rather, 2019. So that's something to be mindful of going forward. And of course, one of the analysts asked a question about, when are we going to be at 2019 levels, or when are we going to be at pre-pandemic levels? They're saying 2023 was probably not going to be the year. It's probably going to be 2024. So maybe that's some of the reasons why the stock responded the way that it had. So all in all, we're not that far off being back to where we are. And these numbers, they say that they're still seeing strength in them. People, especially wanting to do vacation, stuff like that. So very positive numbers. And of course, there's a lot of concern with interest rates going up, like I've talked about in my other videos, especially with Air Canada having the debt that they have and stuff like that. But I wouldn't be surprised to see the stock go higher. And of course, I'm still holding it. But I'd love to know what you guys think. I'd love to know Do you think that we should be closer to these all-time highs? Do you think this price is warranted? And how long do you think it's going to take to get back to where we were before? So that's going to be it for today, guys, and I'll see you in the next one.